Hi, good evening, everyone. Good evening. Happy Sunday to you. And thank you for being here this evening. I really wanted to connect with you and to first of all say thank you for your subscriptions and your likes as well. I do appreciate it. And today I want to talk about this storm that apparently is brewing. Okay, so this is according to Warren Buffett, what he says about the commercial storm is brewing. And now, like I said, I've been through 3 recessions. I'm not talking about 2025 yet because we haven't got there yet. But I'm also mindful and aware of what's happened from the previous recessions that have happened. So I am really looking at the commercial side of things. I'm not talking about residential properties just yet. I'm not talking about residential properties. I'm referring to commercial properties like office buildings, commercial buildings, that type of thing. That's what I'm referring to. And there are some massive things happening even now that, as you know, I talked about in my video where I talked about Macy's getting rid of like 150 stores, for example, and really focusing on the online space, for example. Now, they're having to sell their buildings, for example. People are selling their commercial buildings for a lot less than what it would have been valued at because of this situation that's happening now. And I just want to really home in on this so that we're aware of this situation whereby the commercial properties like office spaces, like commercial buildings, factory buildings even, because of people working from home more remotely or hybrid, that type of thing where there's not so many people in the office like there used to be. There's been a big turnaround, and this turnaround is whereby the organizations are literally saying to their staff members, work from home. It's cheaper for us, it's better for you. You haven't got to pay for transport and all of that, because obviously the transport as well, I mean, they've got some things to be dealing with over the next couple of years. Because if people are working from home more, then that means not many people will be going into an office building. Not many people will be going into a factory, for example. More people will be working from home. More people are quitting their jobs to work from home. So this is leaving a big gap in the commercial space. So like the big organizations, they literally are they're having to sell the building. So you imagine that there's an office building and it's not full. I don't know if any of you have noticed that when you go into an office building, is it full like how it used to be? It's not. It's probably half full. So you imagine that office building and that factory, for example, they're not as full as what they used to be. So what do you think that the impact of that is going to be? They have to sell. And the reason why it has to be sold is because they may possibly have a mortgage that they're paying for the office building, that they paid hundreds and hundreds, even millions of pounds or dollars for an office building, and it's not being used. Yes, there may be a few tenants in there, but is that really covering the mortgage for that office building? So what's happening is there's a lot of talk with the big organizations, for example, the office buildings that they've got. They're looking at the sale, that they may need to sell it fast. Otherwise, they lose everything. The banks could pull the plug on everything and just take the building back and then sell it for peanuts, because maybe the office building, they're not able to pay that mortgage, because the mortgage would have been a lot high than what they've got the funds coming in. So then it puts them into great difficulty, that they can't pay their building mortgage, their commercial mortgage on time. So what will happen there is that the bank will have to foreclose. There's a lot of foreclosures going on right now as we speak, because people can't, those that own the commercial buildings, the office spaces, for example, they're at a loss. So they can't cover the mortgage. And if they've got a mortgage, you imagine that you've got a mortgage like how it used to be, I would say probably 2008, when the property crash happened as well. They've got a mortgage, and the mortgage is fixed for 3 years, for example. And I'm giving an example here. And this is what used to happen with residential properties. The mortgage is fixed for 3 years, and then after that, the mortgage goes up, and it could even double. And that's why back in 2008, people were able to sue the organizations, like the institutions, the financial institutions, for mis-selling a product. For example, endowment, for example, or that the insurance rates would be this amount for 3 years, but then when the recession happened, the mortgage trebled, sometimes 4 times. So people couldn't afford that. And to top it off, there was a recession going on as well. So people were losing their jobs. People were also, like with me, I lost half of the money coming into the company, for example. So there's a cause and effect, but I believe now that the residential, and don't quote me on this because I'm not a financial person, but I'm focusing on today, not the residential side. I'm speaking about on the commercial side, those that have got commercial mortgages, office spaces, factories and things like that. So they could have a fixed rate for a number of years, for example, 4 to 5 years possibly. And the 5th year or the 3rd year could be coming up in 2025. And then their rates will go up, their payments are going to go up. But you imagine that you've got an office building, and next year you've got what? 1/3 of the people in the office building, possibly. So that's not going to cover their mortgage, for example, that they have to pay. And when you've got a business mortgage, it is not like, you've got this mortgage for 25, 30 years, for example. It could only be, it can be for 10 years, 15 years, for example. But it goes up after so many years. So what's happening is that the rates are going to be affected because they're not getting the payment in like what they expected to happen because of, and this is all cause and effect from the COVID situation as well. People got used to working from home more. Companies were happy for staff members to work from home, and staff, some companies allow staff to come in, say 2 or 3 days out of the week rather than every day. So the staff members could swap, for example, seats or whatever, okay, in this particular office building. So officers are feeling that there's a big storm coming. So people are quickly trying to sell the assets before it gets to the point where they lose everything. Do you get me? So imagine you, the business owner, you know, if you've got an office, you know that you don't go into that office every day. Or if you do, have you noticed how empty the building is? If it's a big building in London, for example, or even America, you know, there's been office buildings that were around for years that was millions of dollars, for example, and they're foreclosing on them. The commercial market is dwindling because they're focusing more on online rather than a physical building. Just like you can see that there's the shops on the high street. How many shops are open on the high street? Do you see lots of shops closed on the high street? Imagine that they've got a mortgage for a particular shop, for example, and there's not enough foot traffic. Yeah, they've got to go selling stuff online, but not everyone can do that, you know. So this is why I spoke about the Macy's and Amazon, you know, how they've changed things around. Like Macy's were like, right, okay, we've got 165 stores that aren't performing. Originally it was 150, but they realized it's 165 stores that are underperforming. We got to do something now, otherwise this can be a massive effect, a massive loss for them. So that's why they're focusing on closing the underperforming stores, 165 by 2026, for example, and they've starting the process from like now, and they're focusing on the stores that are higher turnover, for example, getting them refurbished and things like that. But they're going to have to sell a lot of their assets, for example, to restructure and put it to where it needs to go. Now, office buildings are experiencing the same thing. There's not enough people paying the rent that it used to be. Now they're struggling. They're struggling to, you know, because before you'd have to pay for the car parking. What's happening to car parking? Secondly, the office building isn't as full. What about the restaurants surrounding these offices? That's cut down, hasn't it? Because not everyone is going to eat lunch or grab something, coffee or whatever, because they're working from home. So that's affecting the shops. It's affecting the stores. For example, it's affecting the retail shops, because people used to buy little clothes and bits like that. Even the charity shops are being affected as well. You know, it's not just the commercial building itself, it's all the other I can't pronounce it properly, interdependent things that relate to that particular shop. It's affecting everything within that area because they're all interconnected with one another. They feed off of one another. So why am I here today is because I'm here to say that is there any way that you can look at, because you got your office, maybe you've got an office, okay, or maybe you've got a retail shop that you've got your business operating from, then you need to look at this immediately to see whether A, you can get a reduced rate. If you are renting, that is, I'm not talking about if you own the building. If you are renting, see if you can get a reduction in the office that you've got. Or look at hiring out a big chunk of that so that it just pays the rent. But I would look at getting a reduction, because you've got to start looking at how you can get a reduction on things to help save money for the company that you have. And what's happening now is like there's people selling their commercial properties right now before things get really bad, and they lose everything because they don't want the banks to snatch back their buildings, and they've got millions in that building. But this is where the option is that you can actually purchase one of those buildings for a reduced rate. And I don't mean this to be, I'm not saying it to be horrible, I'm saying it to be realistic, right? I know what it's like through the recession when you lose everything. You know, when I had a mortgage in the UK, for example, and that mortgage went up 4 times. You know, so we all know what that feels like when you've got property and you've got a mortgage, and that mortgage time comes to a certain level, and then it just, because of inflation, it just doubles your payments or trebles, for example. And that started happening, 2 years ago, for example. But I don't believe the residential market will be so affected like the commercial buildings. Have a look around, directors, just have a look around. You can see it. You go into your office building and it's empty. What's happening to the shops that are around that office place, where you used to get your lunch from, your sandwich from, where they used to go and do a delivery? They'd come and deliver the stuff to you. What's happened to them, for example? So there's also the charity shops that are around. What's happening there? Let's even look at this in another way. Nursery, child nursery. Now, the nursery, they usually own the building, and they've got a mortgage to pay on that. But now, because there's a lot of people working from home, then their children don't need to go into nursery. So what do you think's happening with the nursery schools? That's closing, isn't it? Then they've got the building that they've had this, they've got the building, and their mortgage, their commercial mortgage could be, 15 years, for example. Even could be 20 years, depends how old the person is, for example. So what you need to look at is like the Warren Buffetts and like the other big organizations. They're looking to see where they can purchase at a very low price, but the building will have some tenants in that can pay the small mortgage that they've got, because they got it at what the bank has said, we will accept that price. The tenants are there, so the money is covering the rent, for example, and they can sit on things as well. So it's not like it's for those that have, spent millions on an office building or a commercial building, and they've had to look at getting rid of it because they know that there's going to be an issue next year. They know that they're going to lose that building if they don't sell it, and just sell it for what, for, it might even be for less than what they paid for. Usually it is, because when you sell in that way, usually you're losing thousands and thousands. You're literally at a loss from when you first got that mortgage, for example, the commercial mortgage. you may lose your deposit that you put down. You may have put down 30% and you've lost that deposit, as well as you've got the mortgage as well. And then the bank sells whatever they can sell it for quickly, and you could possibly as well lose half of that mortgage is just wiped out, and someone's brought it for cheaper, but there's still tenants in that office building. I really want to put it to you, because there's certain locations around the UK, it's worldwide. It's not just the UK, it's America as well. There's certain locations where this is happening more. There's also the types of mortgages as well. So speak with commercial brokers. Speak with commercial brokers to see if there's any distressed properties, any properties where people need to sell quickly, because they will know, as well as the bank, they will know as well. Imagine that you are a commercial estate agent right now, and your income is to, how can I say, your income is to, rent out these properties or to sell these properties. So imagine you're a commercial sales agent. You're at risk as well of losing your business. So imagine you've got your rental, commercial rental that is. I'm not talking about residential. Okay, I'm talking about commercial rental, that you're renting out these office buildings, for example, and you're getting a percentage, your management fee, for example. Then there's the companies that sell, and someone has brought from you, but no one's going to be buying. People will be buying actually. They'll be buying because they're going to get things for a lot less than what it's actually was worth, what you paid, what that person paid for. So this is like a big massive storm that is here. It's brewing, it's here. And I've done this live today because I want you to look at, because let's be honest and let's be frank here. People will take advantage. People take advantage of, even when you're going through a difficult time, someone will come in and snatch what you've worked really hard for. They will. It's nature, they do. People do it. People wait for these things to happen. Recessions come around. Usually it's like, you could say really 10 years, but it's like happening every 4 years. I mean, 2020, we're now 2024. It's like 4 years. Well, really, it started 2019, didn't it? I'm referring to COVID, for example. Before that, it was 2008, but they say 2010, but it started 2008, for example. Then there was 2001. So it's coming round more frequently than what it was before. So we need to look at these patterns, and if you're looking at being a true investor and a true person that wants to look at how you can capitalize on this, then this is the time to start looking at this now. Don't wait till April comes. Start looking now. Start speaking to people now. Communicate with people. You know, it's not about what you know, it's about who you know. Speak to some estate agents that are commercial. because believe me, they will be aware of who's getting rid of what a lot sooner than it's actually on the market. So try and be ahead and get ahead of it before you miss out. Okay? So, like I said, there's the commercial market, and this is the reason why I'm doing this live today, is to go through with you some of the things which you can do. And like I said, Warren Buffett, his prediction, he said that there's a storm brewing, and it's the real estate market by 2025. So his warning is something that we should take very seriously as well. But I also want you to analyze the UK and the American commercial property market, especially office spaces. Investigate, have a look at it now. Start looking at it now, well, as soon as January comes. Some of you may be on your break, but I'd be looking at it now, for example, and look at a strategy that you can do to find high profit deals. Some of you are in the property market, I know that, but this is a way that you can actually find some really good deals as well. But you also want to be aware of who it is that you're dealing with, so you want to make sure that you do it properly. Now, Warren Buffett mentioned about the real estate market storm, the commercial real estate market storm, and the rise in interest rates with inflation and the shifts in the demand for office space, which is decreasing. You all know that it's decreasing. You know, how many times do you go into your office? Maybe you go in every day, but majority of people, they really don't want to go into an office. They'd rather be at home because that's where they're at home, their family's there. They haven't got to pay for childminding fees either, because childminding fees are expensive. So there again, the nurseries now, they're being affected. All the retail shops around this office building or office buildings that was feeding one another is decreasing to a big capacity. So, and this is an impact globally. It's not just the UK. They're all interconnected and they're global trends. And this includes the UK. So think about how things was in the past and what the outcomes were. People were able to buy office buildings for cheap, weren't they? Because of the crashes that was happening. So the UK commercial property market, particularly office spaces, is at risk. And the post-pandemics, we've shifted to remote work. We're hiring virtual assistant. We're hiring people from around the world. We're global. We're not in the office like how it used to be, where you had to hire people and then they'd work in the office and then you employed them. You don't have to employ people now. You can have contractors. And imagine the high streets like in London, Birmingham, Manchester, the office buildings, Wolverhampton, Nottingham, all of those big office buildings. what's going to happen to them? They're going to be sold for probably a fraction of the price. People are going to be left with debt, no fault of their own. This is what happens when there's a recession. So for you, if you're able to look at what the market is and see and keep your eye and ears to the ground and be ready, then you'll be able to, really make it work for you, because there will be some tenants in the building, for example, unless the bank has just taken it and everyone's had to leave, for example. But look at what opportunities that you can find in office spaces. If you are renting an office, then maybe you can have a reduced office rate. Identify underutilized office buildings that is ripe for redevelopment, because maybe you could look at, mixed use properties, for example. There is a shift to co-working spaces and the rise of suburban office demand. Look, remember years ago when there were factories? What happened to those factories? They got turned into apartments, didn't they? They got turned into suburban luxury loft apartments, for example, condominiums, or even the churches in the UK. Some of them have been turned into properties. You imagine you've got a big care home, for example, and you've got a big mortgage. But luckily you've got residents. However, what happens if you get to a lower level? Will it affect you as well? Look for care homes, because maybe people are retiring. Maybe they have not passed their CQC inspection. I'm referring to the UK here. Maybe they haven't passed their CQC inspection, or they're thinking, you know what, I've had enough. I don't want to do this anymore. I want to sell. So maybe you could buy a care home. We get calls all the time for someone that wants to sell a care home. I'm actually thinking of selling care homes, because we get so many calls where people are wanting to sell because they're tired. They're fed up with the inspections that they're having to deal with. Maybe some of them, they want to retire, or they're not well, or their loved one's not well, and they don't want to do it anymore. So think about the opportunities that arise. Like I said, with some of the care homes, because they've closed down, could be mortgage, there weren't enough residents to pay for things, then maybe they may lease it to you rather than get a mortgage, because they've got a mortgage and they want the mortgage paid for, but they don't really want to be running the care home. You've got the energy to do it, go for it. We get calls that way as well. We also know a few organizations as well that do this. So, like I said, identify underutilized buildings that is ready for redevelopment. Now, what I want you to think about is finding the right deal. You want to look for distressed properties under financial strain due to market shifts. Focus on value added opportunities, properties that you can enhance or reposition for a higher return. Or maybe you can just sit on it I notice here in Cyprus that people purchase properties, but they're not actually in it, but they're just letting it sit, because then the price goes up and up and up as each year goes on, so they're actually making money. But even for me, for example, you could rent that property out, and it will pay for itself, the mortgage or whatever, for example. So like I said, utilize these properties, look for opportunities, utilize creative financing methods to minimize upfront costs. And what I'll say to you is that there is several ways of how, and I discussed this in our business recovery, our exit strategy as well. There's ways that you can utilize things without you actually having to pay a penny, for example, that you utilize what's already coming in. So do your due diligence, okay? You want to be able to do a thorough market research, and you want to look at the location, the desirability, and whether it is whether there's tenants there, whether it's stability in there to pay for if you are getting a mortgage, for example. So what is it that you feel that you'll be able to do right now to look at this situation? Some of you have got properties already, and some of you are renting to families, for example. But why not do other things with that property that you've got, like a care business, like supported living, for example, or a care home, for example. I started my first care home in 1994. It was registered for 4 residents, and I was registered with the Nottingham County Council back then, for example. And that was with a 4-bedded property. It was accessible because it had a ground floor with a ramp going into the front door, as well as a ramp in the, around the back, for example. But there's lots of things that you can do with a property, not just rent to family members. You could you could have a mortgage on a property and turn it into a care home for the elderly or young adults. But elderly is, I would say it's more, it's not easier, don't get me wrong. It is, I find it was more beneficial doing the care home for the elderly because the community needed that. So I looked at what the community needed, and then I provided the care home because it was my uncle that needed the care, and I couldn't find anything for him. So I thought, you know what, let me set one up for myself. And I did. I set up the care home for the elderly, and I got registered with Nottingham County Council at the time, for example, and it was on a council estate because that's where I was living, on a council estate. And people that were elderly needed to move into a care home, but they'd rather move in their community where they lived rather than move into a large care home or a nursing home that they don't know the area or the people in there. With the care home that I had, although it was for 3-4 residents, for example, at a time, they knew the community because they were brought up in that community. So, there's lots of things that you can do to, if you've got a property and it's empty, try and look at that aspect. But you have to get registered with the Care Quality Commission if it is for elderly. If it's a children's home, then it needs to be Ofsted, for example. So I'm just telling you a few of the things that I did many years ago. I had the care home, I had the children's home, I had the supported living, for example, I had the agency, recruitment agency, I had the home care agency. I was also registered as to provide nurses in the community. For example, back then it was called Sea Sky, and then Sea Sky was changed into the CQC, the Care Quality Commission. I also did an agency in America as well, for example, medical staffing agency. But explore the different things that you can do during this market storm, and I'll call it a market storm because it is. Okay, so it's office, retail, and industrial. Explore partnerships that can help you to mitigate risk and to also pull resources together as well. Another thing is that you can capitalize on trends. Embrace sustainability. There's buildings to meet environmental standards. Okay, so maybe you may need to do a bit of refitting, for example. Focus on the secondary markets with high growth potential. What is it that you can do instead? Safeguard and also grow your investments. Like I said, you've got to build a crisis fund, and I keep saying this over and over again, but it needs to be said and it needs to be done. I can't stress the importance of having a reserve fund for downturns. Really does help. You got to be budgeting, but also you got to be saving for the unexpected expenses that can and could happen, should I say. But also you've got scaling strategies. You can reinvest profits into new opportunities, like the office buildings, like the retail shops. Leverage, we've got the virtual assistants, for example. We are a virtual assistants agency, for example, but you've got to also look at the property market, for example. Speak with property management agents, like the estate agents for commercial property. They're the ones that you need to speak with, and if you can speak with them tomorrow, then go and do that. So I want you to think about what Buffett's warning is, and think about how you're going to look at purchasing a property, because you need to go and sit and talk with your bank manager, your business bank manager, to see whether they can offer you a mortgage right now, first of all, to see whether they would be allowed to, if you was to, what the budget is, how much can you go up to, and then you look for properties that is going to reflect that. But it has to be something that's got to be viable. You want properties that have got tenants in there already to minimize the risk. Or there's the properties for you to change its use and turn it into something else that's going to be profitable. Look at the nursery schools, like I said to you. Nursery schools, you could look at turning that into nursery schools. Nursery nurse, for example, there's the nurseries for children. Then if there's one that's closing down, then is that a building that could be turned into rental of some sort, or can you turn it into a place for the elderly, or supported living, for example? Is that you could get a reduction. So I'm just speaking with you just so that you're aware of these strategies. So also what you want to do is, because I've spent years, like 40 years, and these trends, I'm seeing it. This is the third time that I've been through this trend, and 2025 could be the fourth time. So I want to be able to help you to analyze the real estate market, especially in the commercial department, so that you can be prepared for the storm, like Warren Buffett predicts. Remember I said about the eagle? The eagle goes into the storm so it can fly higher, even during the challenging times. So what actionable strategies or real world insights and tools do you need to thrive in this this volatile market? So like I said, the interest rates are rising. There's higher borrowing costs, impact both on developers and investors. The inflation, there's rising costs for materials and labor squeeze profit margins. Post-pandemic, changes in office space, demand as remote work. Care is fine. I'm not saying that care is affected, because it isn't. Don't think it is. If you're in care, running a healthcare business, that is fine. Look, there's the past downturns in commercial real estate, such as in 2008, there was a financial crisis. I was part of that. And it draws my attention to today. There's a market disruption that's happening, and you can create opportunities for you to be an investor in it. So what does that mean for you? It means you can emphasize and really look at making a market shift rather than reacting to it. The benefits here is long-term value rather than short-term gain. This is something that is not a quick thing that you're going to make $1 million overnight. You've got to let it cook, and it will eventually happen without a loss. So, like I said, in the United Kingdom, the UK, office space demand is declining. The demand for traditional office spaces due to hybrid and remote work has caused this, cause and effect. So where the offices are being repurposed, i.e. London's trend of converting offices to residential spaces, you're probably seeing that happening now, for example. There's some opportunities there for you to look at the secondary markets, Birmingham, Manchester, with growth potential. There's the development. Look at where the new transportation links are happening, which is driving value in certain areas. So check that out. What is being revamped? The transport, they say, in the October budget, that they're chucking money at the transport. So where are those major points? And look around those areas. look at underutilized office spaces. If you got an office and you possibly got like 5 or 6 desks, then why not rent out a part of that and do co-working space? So a lot of people are doing these hub things. Office spaces are being turned into co-working hubs or mixed-use development. Offices are also being turned into residential conversions, just like how the factories used to be. You used to see the factories that would be huge, big factory, and they turn it into a property, for example, or it could be apartments, luxury apartments, even barns. They were turned into beautiful houses, for example. Look at these suburban shifts that's happening. So there is a demand for the suburban areas to adapt the workforce. So look for distressed properties. Look for properties with financial or operational challenges that you can resolve. Look at the opportunities that you can focus on, properties where you can improve cash flow through renovation or releasing. Creative finances, seller financing to reduce upfront costs. Partnering with investors to pool resources together. Look at doing research into property listings, platforms, local business directories, real estate agents, analytical tools to find leads. There's so much out there, and this is why we've got the boot camp in January, and that's why I'm going to be going into this as well, because this is all part of, increasing your income, for example. So ensure that you've got positive returns after the expenses. Is the tenant, if you're looking at purchasing a property, for example, even lease, are the tenants stable? You want to see the records to see how long the tenants have been in the building. What do they do? What type of business do they do? Location, desirability. What is the proximity to the amenities, the transport links, and the growth areas? There's lots of deals out there, and you are very close to these transactions. You just don't perhaps realize it, or maybe you do, and you're probably working on this right now. But you want to look at the property's value and its exit profitability. So thrive in the market during the storm. Look at interest rate strategies against the property, for example. Diversification. You want to spread your investments across property types. Residential, from industrial to residential, from industrial, retail to residential, for example. It really depends on the location and what the need is, because we are all seeing a decrease in people going into an office building. And that office building also has shops around it. And what's happened to them? Pop in and ask them how sales been for you. They'll probably tell you hasn't been very good, for example. Look at partnerships, form joint ventures to share risk and opportunities. Capitalize on emerging trends. Use property management as a way to increase efficiency. Look at the hybrid work models. There's flexible spaces for catering to businesses with hybrid workforces. Safeguard your growing investment by building a crisis fund. The importance of a reserve is important to ensure liquidity to manage unexpected market changes or vacancies. Look, if you had a crisis fund and you were saving up 10-15% already, you would already have money ready to put into this in 2025, wouldn't you? So allocate a percentage of monthly revenue for an emergency fund as well. You want to use the proceeds from one property to fund the next acquisition, for example. So what I want you to think about is, are you in a strong position to capitalize on the deals? Have you found any? Do you market research on real estate analytical platforms? There's lots of analytical platforms to identify undervalued commercial properties in the area showing signs of growth. Look at the location and do an analysis identifying the suburban areas that are gaining popularity due to hybrid work trends, because some of them are being used in that way, but some of them aren't, and that's what you got to look out for. Speak with commercial real estate brokers who specialize in distressed properties. It's really important that you do that you communicate with people. And you can also do site visits as well to see what the tenant mix is, renovation if it's needed. I'd like to hear your comments here in the section here to let me know what your thoughts are on this. Are you affected by the property, or are you looking at purchasing a property? So what about the tenants? Maybe there's tenants in the property, but the firm, management firm, or the owner of the building, they may want to do a lease with you. So negotiate a lease with the existing tenants, because maybe they've had enough. And then you can attract new tenants, and you can then provide a stable growth. Think about things like tech startup, healthcare firms. Buildings can be used in that way. So implement this by looking at what the rental is going to be, the collection, what the maintenance request is, what is the cost for maintaining the building. See if you can refinance at this time. Speak to the bank quickly. They may turn around and say no because of what's happening, but if you've got something that is a good, strong thing, then maybe they could say yes. No harm in trying. And I'll tell you what, there's a lot of property here in Cyprus as well. And you know, there's so many different ways that you can do things in order to really make 2025 your year. And I do discuss some of these steps in January's boot camp. But like I said, you know, Warren Buffett is not going to be affected because he knows what he's doing. He already knew that there was a problem coming up, you know, from early part of the year. He knew there was a problem. You know, people have been saying it for a while now. It's nothing new. But there is a surge in commercial foreclosures. So I'll give you some data here. Recent data indicates that in September 2024, there was 695 commercial foreclosures in the US, marking a 15% increase from the previous month and a 48% rise compared to the same period as last year. That is huge. Another one, talking about the US here, California, 264 commercial foreclosures, a 12% increase from the previous month, and it's a staggering 238% jump year over year. New York, there's recorded 92 foreclosures, up by 59% month over month, 48% from the previous year. Florida, 70 commercial foreclosures, a 21% rise. It's a massive impact, isn't it? The office sector is particularly affected due to the factors such as increased remote work and the rise of interest rates. Property values in London, office properties values have declined by 20% from 2022, reflecting the global nature of this downturn. And banks are getting more involved in the sale of distressed office properties. There's foreclosure sales, there's market listings. The commercial real estate market, especially the office section, is undergoing a period of distress categorized by rising foreclosures and declining property values. Banks and financial institutions are responding by offloading these assets, often at a reduced price, to navigate the economic landscape. There's lots of information here. But Macy's, like I mentioned, they implemented a strategic plan to close approximately the stores, 150, but it's 165 stores. It was meant to be 150 by the end of 2026, with around 65 closures scheduled for this year. And they want to optimize on the company's physical retail footprint and adapt to the consumers' changing behavior, including online shopping. So these closures are all part of a broader strategy to monetize less profitable locations and transition towards smaller format stores with lower overhead costs. Macy's a plan to refurbish 350 remaining locations and open up 30 new small format Macy's and 15 Bloomingdale stores focused on luxury merchandise, but it's going to be around the proper locations, and it wants to generate up to 750 million from the sales of the closed stores, which is going to help them boost the profitable stores. You see that their mentality, how they're already thinking and planning. There was a recent sale of a Macy's store in Brooklyn, and it was below market value. So this is a good time for you, if you're able to look at these properties, retail properties, commercial properties. I remember you could buy a garage for, £1,000, for example, and then people could park their cars in that garage and then they go into work. But now, and people would rent out the garages. So what's going to happen with those garages that people have purchased to rent to people so they could have their car parked there and then go into office? But if they're not going into the office, they're not going to need the rental garage anymore, for example. I'm just giving you little explanations here so it becomes a bit more clearer to the cause and effect. It's like a domino effect. So think about what you're looking at doing. Just like Macy's is a sign that the bigger changes in commercial real estate is changing. But learn how you can profit during this market shift. This is the point of me doing this live today, is not to bring you down. I want to bring you up, like be the eagle, and use this as a stepping stone for you to launch and to fly high, so that you can look at this commercial real estate and use that to your advantage. I'd love for you to share any updates on the real estate market trends. I'd love to hear from you. I'd also love for you to subscribe as well and check out the other videos that I've got here as well. I'd also love for you to book a free 15-minute appointment, probably end up being 30 minutes, to discuss our Business Recovery Bootcamp, which starts January the 7th, 8th and 9th. But we also have them every month. We also provide the recording for it. The one in January is live. The one after that, it will be live every month, but you also get the recording. It's for 4 days, and a part of this is we spend on finding these properties, where the listings are, estate agents. You practice, because you don't want to miss an opportunity like this. Okay, so thank you so much for being here today. I hope that you found this helpful and that you've been able to to learn a lot from it, because you know the commercial property market is being affected by it. And although you may be going into your office or into work, I want you to have a look, or maybe you own the office building, I want you to have a look and see with your own eyes, is this office full? Is the office space, the building, is it full or is it empty? What are the stores like around where you go into this office building? You know, the restaurants, the shops. You know, how many people are going into these shops? Talk to them. Talk to them. You know, if you've got a newspaper shop, pop in there and ask them how things are going. Pop into your restaurant, how's it going? Pop into, you know, if there's like a snack bar or whatever, coffee shop, how is it going? You know, is business booming, or has it slowed right down? Because then you'll get a good idea of what's happening. Because if we're not aware of this, then how are we going to push forward with this? Speak with estate agents, commercial estate agents. Ask them about, is there any distressed properties? So you know what the prices are as well. And then speak with your bank. Is there any properties that they're aware of, that they know of? Because then they'll tell you where to go, who's dealing with it. Then you can then go and approach the organization, for example. So like I said, you know, 2025 is about you becoming the eagle and soaring high, so that you will be above the storm, not hiding from it. So thank you so much for being here. And if you've got any questions, you know, comment, for example. Also, if you want to also book a free 15-minute, I would love for you to book a free 15-minute, 30-minute appointment with me, so that, you know, I can talk to you about the boot camp in more detail. I would love you to watch our previous video, which we did yesterday and the day before, which also went into some of the boot camp items that we talk about as well in the real boot camp, which starts in January. And if I don't speak to you sooner, have a wonderful new year. And I will be coming on here live again tomorrow to talk to you about some more strategies for 2025. So thank you everyone for being here. I've really enjoyed speaking with you. Have a blessed day, and I will see you on the internet. Don't forget to like and subscribe if you found this helpful. And I would love to hear your comments I'm going to pin a comment actually, and I'd love to hear your comments of how you got on once you've gone out to do your own research as well. All right, so thank you so much. Have a wonderful, wonderful evening. Take care, everyone. Thank you very much. Bye.